All right, welcome to Talker Tickers. Today we're diving into NICE's fourth quarter 2025 earnings call. And let me tell you, this was not just another report. This was the kind of report that completely changes the game. It didn't just beat the numbers, it totally flipped the script on the whole story surrounding the company.
So before we even dig into a single financial metric, let's just look at the market's reaction. I mean, wow. The stock shot up over 13% in a single day. That's a huge move. So the big question is, what on earth did investors see in this report that got them so fired up?
Okay, so let's look at the headline numbers. At first glance, you might think, what's all the fuss about? Revenue was $786.5 million, up 9% from last year. Non-GAAP earnings per share came in at $3.24. Both of those were a little bit better than what Wall Street was expecting. It was good, solid, but let's be real, that's not enough to explain that 13% jump. No way. The real story, the thing that got everyone excited, was hiding just beneath the surface.
Okay, this is where things get really interesting. Forget the non-GAAP for a second and look at the official GAAP earnings per share. It went from $1.54 to $2.41. That is a massive 57% jump year over year. Now that's the kind of number that turns heads. This is what we call operating leverage, and it's what got investors so pumped. But the real question is, why? What's driving that incredible profitability?
Well, here's the big secret. NICE is not the company it used to be. It has completely transformed itself into a cloud-first powerhouse. I mean, just look at this. Cloud revenue now makes up a whopping 77% of the entire business, and it's growing at a really strong 14% clip. This is the engine of the whole operation, and that engine is being absolutely supercharged by one thing in particular.
And you guessed it, that one thing is AI. We're talking $328 million in AI-driven annual recurring revenue. Let's be clear, this isn't some little experiment they're running on the side. This is a core part of their growth strategy, and it exploded, growing 66% year over year. Management could not stop talking about this number on the earnings call, and for a really, really good reason.
And get this, the growth isn't about to hit a wall either. This next number might actually be the single most important one from the whole report. Their cloud backlog grew by 25%. So what is backlog? Think of it as deals they've already signed, business that's already in the bag but just hasn't shown up as revenue yet. It's a crystal ball into future growth, and it's telling us that things are actually set to speed up. Oh, but they weren't done dropping good news, not even close. They basically threw two more giant logs on the fire to keep the momentum going. First, they're buying a company called Cognigy to boost what they call agentic AI. The simple way to think about that is AI that can do stuff, not just answer questions, super powerful. And second, they announced a new $600 million share buyback. That's management putting their money where their mouth is, sending a super clear and confident signal to Wall Street.
So, look, all these amazing numbers, the revenue beat, the crazy profit growth, the backlog, it was all just setting the stage. It was the ammunition they needed for the real battle. Because heading into this earnings call, everyone, and I mean everyone, was asking the same big question about NICE and this whole industry. Is AI coming to destroy their business, or is it about to become their biggest opportunity ever?
And this really sums up the whole debate perfectly. On one side, you have the bears, the market's fear. Their argument was that AI is going to replace call center agents, which would obviously crush demand for what NICE sells. But on the other side, you have the company's reality. Management's been shouting from the rooftops that, no, you've got it all wrong. AI is a huge tailwind for them, making their market bigger and creating more demand.
And management did not dance around this issue, not at all. During the Q&A part of the call, the CEO, Scott Russell, just came right out and said it. This quote says it all. There is clearly a disconnect between the fears in the market and the reality of what we're seeing in the business. I mean, that's about as direct as you can get. He was basically calling out the pessimists, and you could tell it really resonated with investors.
And it wasn't just talk. He came armed with facts to back it up. They laid out 4 key pieces of evidence for their case. First, every single one of their big 7-figure deals now includes AI. Every single one. Second, there's still a huge runway for growth. Only about 40% of contact centers have even moved to the cloud yet. Third, they're actually winning more business against these little AI-only startups. And finally, and this is the big one, their customers aren't firing agents. They're using AI to let those agents handle more important complex problems. That right there was the knockout punch to the bear argument.
All right, so that's the story of the quarter. That's what happened, and that's why the stock went absolutely ballistic. But now let's put on our analyst hats and look forward. What's our take? What are we expecting to see in the next report? Okay, here's the official Talk Ticker's call on this. For the first quarter, we're predicting they'll beat the earnings estimates, but probably just meet their revenue guidance. They don't need some massive beat and raise to keep this thing going. As for the stock price, we think it'll probably chop around a bit, consolidating these huge gains before it makes another push to test those highs it hit right after earnings. You put it all together, the accelerating backlog, the incredible AI momentum, and the fact that management just won the narrative battle, and for us, it all points to one thing. We are initiating coverage with an outperform rating.
And as always, just a quick reminder, this is for informational purposes only. It is absolutely not financial advice.